We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up MDB stock. We are on a monthly time frame. Price action, last candle to the right hand side is a bullish green candle with a press up to the top. Also, it looks like it's coming from an area of resistance of a pattern, and we can see prices near a midpoint of that overall high and low of that area. So we do have price action overall, higher highs, price action overall, lower lows, midpoint, adding second level highs, also adding third level highs. Current price is sitting at 363.74. So if price goes up to the next level, let's say the market's going to move up, we can see price heading up to 441.37. If price works its way down, it can go as low as 244.81. So let's say that market is going to work its way down for that decline. There's a pattern up here at this high, multiple touches. So we do have that first leg, second leg, third leg, fourth leg. So we have a decline M. Okay, the market did break that area, came back to retest. If price have a hard time breaking this area here for the push up, it can be rejected. So price will be coming from a double top and a retest. The market pushes down to the previous area. If market work its way up for that incline, we are looking for that coming down in red. We already have it. First leg, second leg. So either a pattern is going to identify itself or the market's going to break, come back to retest this area for that third leg, and we can see price push up all the way back up to previous areas of highs at 532.41. Or we can receive that consolidation near price action working its way sideways until market breaks out or drops back down to the previous level. On the weekly time frame, we have price action as a bullish green candle. So it's looking like it's coming from some type of area of support. There's also a pattern here at the bottom. So let's draw what we see at the low. Coming down in red, first leg, second leg, third leg, fourth leg, and we have a W formation. And after that is multiple retests. So we have that fourth leg, retest 1, retest 2, and that market broke out to the next level. Second last candle is a retest, third last candle is kind of push out that area. So market's coming from multiple pushes down to that bottom altogether, quadruple bottom or triple bottom and a retest, and we have another retest here at this high. The current price is at. If that market's work its way down from this area here, we can already see that this area is kind of in a wedge pattern. So it's either going to break up from this wedge pattern or break down from this wedge pattern. So let's say market work its way down. It's coming from an overall structure of that break that we already have. Market came back to retest. So that means we're looking for a pattern to identify itself in this area. If we receive a bearish red candle or a pattern similar to that, market's working its way down to the previous area for a break and retest. Or that market can consolidate sideways within price action, second to last candle. So current price action, bullish green candles breaking out SR line. So as we walk down further, we're going to see what's really happening. On a daily time frame, we had price action as a bullish green candle, gap in the market as well. Second to last candles came from an area of support. So if we draw it out, we do have that first, second. It's kind of broken up. So let's say we just have a single bottom. Market single bottom and broke up for that second leg. and then we're looking for that market to retest back to this area of the SR line after it breaks to push up further. So once the market breaks on the daily time frame, break the SR line, it can push up to somewhere near the price of 382 and then come back down for a retest back to the previous SR line, which is 359, and then fully break out for a full push unless we receive some type of pattern formation in this area. Now that market's working its way down. It's coming from a pattern from the previous side. What's short out will be first, second, third, fourth, was we got an M pattern, broke the SR line, market came back for a retest. If we receive a pattern in this area like a bearish red candle, market's coming down from a double top and a retest. And when it comes down, it come back to previous areas somewhere around this area, which will be around 329.01, unless it stopped to the midpoint of this area, but it can go as 321.01. 4-hour time frame, price action, second last candle side by side, very close together. Slight push up, but very close together. Still hanging around the SR line. So if we take a zone and we place around the SR line a little bit to the top of the SR line and a little bit to the bottom, we can see markets trying to break out that area so it can't consolidate. Also coming from a pattern at that low. 3-hour time frame, still reading the same thing, side by side, price second, third. Price action is actually a retest candle. Second to last candle, third to last candle spiked up. Price action just retest that midpoint of the second to last candle. If it's respected, we'll see a bullish green candle push out. If not, we're looking for a bearish red candle to engulf the second to last candle of the market to push that market down. 2-hour time frame, reading the same thing. 1-hour time frame, still reading the same thing. So we got a bit of a push though. We'll talk about it on a 45-minute time frame. So we can see that market pushed up, came back to retest, broke up through the SR line, came back to retest, push, retest the top of this area of resistance. So market is consolidated with price and second last candle until we see the next engulfment of the price action candle, which is a bearish doji. Same thing as a 30-minute time frame, still having a bearish red candle, so market is identifying to spike that area twice for a single bottom and a retest. 15-minute time frame, starting to receive an engulfment pattern almost. So price action is engulfing the previous candle. Okay, it may have to drop down below the second last candle wick. It may have to drop down or show a pattern within that third last candle, depending on how it looks. Price action bearish candle also got a long wick up to that top, so it could be dropping down for a full break for the next level. So if you had to break this down in sections, we have a high, we have a mid, we have a low. So price action can make it down to that midpoint of the 363.06. If it breaks that, it headed down to the next level, which would be near 360.70. 5-minute time frame, bearish red candle still working its way down, but we want to see this price action candle engulf the fifth to last candle of the market, which is this doji with the long wick. So you want to see it break down below this wick and close out. So if price is headed down, we want to see it head to 363.31 and break below that and close out, and to see if it's going to may come back to retest. So it'll be like a break of that area retest and then push down further if it's declining. But market is in that near that midpoint and broke below that midpoint. 3-minute time frame, starting to see the retest at that midpoint. So that's why we put it there. Third last candle push down. Price action retest, still looking to see if it's going to happen. So if it pushes up above and start going into the back up into the opposite direction, we're waiting for price to head back to 364.18. If not, we're looking for that break of this bearish red candle below that wick near 363.30. On a 1-minute time frame, we have the engulfment to the previous side. So market, it can work its way down, and it is working its way down. You want to see price make it down to this wick, which would be to the next level. Okay guys, breakout and retest strategy, Forex pattern cheat sheet. This is Cam Jones, FX, MDB, Star.